we'll bring you stock-specific queries being answered by our experts. But before that, a quick look at the market. Ankita, fairly positive day for the markets today, holding steady about 25,100 mark.
Yes, Kanishka, as if now we are managing to hold above the 25,100 mark. We have recovered from the day's lowest point. It's a recovery, mild recovery of 25 odd points coming in, but we are above 25,100 like you mentioned. Nifty Bank has posed a better recovery from the day's lowest point. It's up almost 95 odd points from the day's lows. 56,833 is where Nifty Bank is perched at. Let's look at the sectors then. It is the auto sector that's in the fast lane. Now, why is auto doing well? It is on the back of the US and Japan tariff deal that has come through, where the tariffs on Japanese automobiles will be reduced, the ones that are imported to US, and on the back of that optimism that perhaps that could that deal could also happen with India and other emerging markets. There is exuberance in the auto pack, and therefore if you look at Tata Motors, that's up in a way 2.5%. Maruti is up 1%. M&M, that's up 0.5%. So entire auto pack is in the fast lane on the back of the US-Japanese trade deal that has gone through. Besides that, Nifty IT is also doing well. LTI, Mindtree, Infosys before its results. We are expecting Q1 results for Infosys. Before that, that's up in a way 0.6%. TCS is up 0.4%. HCL Tech, Wipro, all of these are trading in the green. Metals is also doing decent, and so is Pharma. But on the losing side, we have Nifty Realty that is trading with cuts of more than 2.5%. So Nifty Realty is really on the losing side today. And let's take a look at the broader market ones. Broader markets are seeing sharper cuts. It is underperforming the frontline indices like yesterday. The decline continues. If you pull up the chart for Nifty Mid Cap, that is trading with cuts of almost 0.1% right now. It has recovered from the day's lows. Remember, it was trading down 0.4%, but a recovery has come in for mid caps. Small caps also a mild recovery coming in there. Now trading with cuts of 0.3%. So broader indices are underperforming the benchmark indices. Really, so Kanishka, even though I would say on the frontline index, there is not much direction coming in. We are very range bound, but there are individual pockets and stocks that are moving on the back of Q1 earnings and news flow.
That's right. So earnings remain a key factor to watch for the market direction. But moving on, let's get started with all our stock-specific queries then. Requesting our viewers to share your stock-related queries on WhatsApp. Ping us on the number that is flashing on your screen to get an investment analysis on your holdings and tips for fresh buys in the market. Don't forget to write your name, your stock's name, your holding price, and the time horizon that you wish to keep the stock for. And to decode the market trend further and to answer all your queries, we're now joined by Shahina Mukaddam, who's an independent analyst, and Hemeng Kaparia, who's a technical associate at DR Choksi FinServ. Thank you so much, both of you, for joining us today. A very good morning to you. Shahina, now coming to you. Before we get started with all the queries, what are you making of the markets at this point?
Well, I think the markets are showing some bit of strength, given the fact that there are some trade deals, important trade deals that are being signed by the US. So some bit of uncertainty is being taken off the table. I think the Japanese trade deal was very good, at least compared to expectations. So we all expect that Indian trade deal also with the US would be good, and some of the important sectors would actually perk up because of that. So I think overall the market looks to be in a decent space as of now. But there are a lot of global issues that we'll have to keep a close watch out on.
China, the important point right now, of course, the tariff deal, especially for Japan, that's come through, and we can see that impact coming in on at least on Indian auto that is in the fast lane today on the back of that. But let's get started with all the questions then. To requesting all the viewers to start sending in your questions on the number that is flashing on top of your screen, the buying price of the stock, the holding period, your question, and we'll get them answered by our experts who have joined us. So let's get started with the first question that is coming in from Kuhan. He's writing in from Bangalore. She wants to know if Ashok Leyland is a good buy at current juncture. I mean, for the long, he's not given the time horizon here. But let me come to you, Shahina. Is Ashok Leyland looking good to you, say, for a period of a year or two?
Yeah, Ashok Leyland actually post their bonus issue has actually shown some bit of strength. I think the CV sector is likely to pick up. So yes, you can continue to hold Ashok Leyland. You could continue to hold it. Keep a target of somewhere close to about. You could see a target of somewhere close to about 145, but you need to keep a stop loss of close to about 120. That's close to maybe 115 would be a better stop loss you would keep.
All right, so that's the view on Ashok Leyland. But moving on and coming to you, Hemen. So now this viewer, Zeenat, is writing to us from Ranchi. She wants to know your view on Zomato. She has 450 shares of Eternal at a price of 180 and 200 shares of Tata Power at a price of 350. She wants to know if she should continue to remain invested in these stocks, and if she should exit, if you could suggest a few names that she could enter into.
A very good afternoon to you, Kanishka. Thank you for having me on the show. It's always a pleasure. Uh, Eternal has walked into resistance from its earlier high and it's run up from 200 to 300. So there's a 50% appreciation in the last few months. So I would say it needs to close above 305 to appreciate further. So I would be slightly cautious at this point in time. Some profit booking wouldn't harm, frankly speaking, actually. And the other stock that you mentioned was Tata Power. From a longer term point of view, it remains extremely, extremely positive. But the thing is, we've had a brilliant run up. It appreciated 10 times in the last few years. That is why I walked into a correction of a greater degree. So, if our outlook is from a longer term point of view, I think Tata Power remains a clear hold. Nothing to worry, but I mean, she needs to hold for at least around 2 years or so. Maybe a little bit of profit booking in Eternal didn't hurt anybody. And correspondingly, if anything that he wants to uh, shift or buy, I think State Bank from a longer term point of view looks interesting. That is something one can consider once again from a slightly long term point of view.
All right, so that's the view on the technicals. But China, let me get you also on board because Zomato came in with its Q1 earnings also, and what a set of numbers that it has posted. I mean, it gave a big, the street gave it a big thumbs up. In fact, the guidance was also good, and the stock saw a jump up, and analysts were expecting whether it will touch 300 or not anytime soon, and we did manage to touch scale those levels, but. Is it safe to say that the worst is behind us as far as the quick commerce space is concerned? Because it was the competition and the profitability that was getting weighed down on the back of the rising competition in the quick commerce space. Is the worst behind Zomato?
Yeah, actually, that was the big positive that came out of Eternal's numbers. That the quick commerce, we've seen it move into good profits also, and in terms of the growth, it's now become a bigger segment in the overall composition of Eternal versus the food delivery business. So I think this is the positive also in terms of the dark stores that they're talking of opening. They're talking of a target of 3,000 stores. Of course, 2,000 is something that they have to achieve first, and the other segments are also likely to contribute to grow the ticketing business going forward in the longer term. A bit of disappointment was on the food delivery business, where the management has reduced its commentary. They are now talking of a 15% growth, which is slower even compared to the first Q1, and of course compared to the previous year. But at the same time, I think it's very well entrenched in the food delivery business. There is huge competition coming in across the board. So I would believe that at 300 levels, it definitely, if you're an investor, you continue to hold. But there is competition that is coming in. So if you want to add, I would wait for dips to add, but then you have to hold it for the medium to longer term. There is a lot of competition that is coming in. You have Amazon that is there, which is actually strengthening its own presence, and of course you have Zepto, you have other, Rapido, you have a lot of other competition that is likely to enter the market, all over India market in the medium term. So I would say add at declines, but continue to hold. It's a concept stock for the longer term.
All right, so you could consider holding Eternal for the longer term. That's the view coming from Shahina. But now, Hemen sir, coming to you, this viewer Balaji is written from Tamil Nadu. They want your view on Manapuram Finance. They have 200 shares at a price of 274 rupees. They want to know the short-term target for this counter.
Okay, just a small caveat. I would suggest to keep a stop loss at 260. Yes, the short-term target would come only if we see a close about 280. Short-term view, short-term target, a daily closing. So a close about 280 is important. I'm not giving 280 as a target. That's just 7 rupees away. Closes about 280. One can expect a price of 296. So that would be short-term target, conditional on closing about 280.
All right. With that, it's time for a quick breather, but you don't go anywhere. We'll be right back. We'll take all your questions on the other side of the break. Stay tuned. Welcome back. You tune into bnsn now with me, Ankita Saxena, and with me is Kanishka Sarkar, and we are getting all our stock-related questions answered on this show. The number is flashing on top of your screen, so you can keep writing to us, and we'll take up your queries. So let's resume with the questions then. Himain, this one's for you. This is Ikam Bara, who's writing in from Hyderabad. He says he has 300 shares of NTPC at a buying price of 380 rupees. He wants to know if this is a good time to average or a good time to accumulate more of NTPC. Would you recommend that?
Well, Ankita, yes and no. Yes, because it is a good time to accumulate. I am assuming the holding is not a very short-term view. Then it quantifies as an accumulate. It's corrected. We've had a decent retracement. Stock is turning now. Things are turning technically positive. Indicators turning by. Multiple reasons why it quantifies as a average at this level, but a slightly longer term point of view.
All right, so that's the view on NTPC. Shahina, now coming to you, we have a query from Siddharth, who's writing from Nagpur. It's a largely broad-based query about the pharma space. He wants to know what kind of impact are US tariffs going to have on the pharma space. Are there any particular picks in the pharma segment that you would like to highlight, Shahina?
Well, see, already Indian pharma, is pretty competitive in terms of generics, which they supply to the US market. So, in terms of pricing restrictions, it is going to be tough for the US government to impose very high tariffs on pharma, even in the longer term, because you have the consumers in the US who will finally have to bear a large part of it. Having said that, I think US FDA is becoming pretty active in India, and they are doing searches without informing the companies in advance. So we've seen a larger number of companies in the pharma segment getting, some bit of warnings that we have seen. Like Dr. Reddy was the last one that got it recently. But I would still prefer companies which have got good products that are there, not only in the US market but other developed markets. Companies like, for example, Biocon, they have got recent approvals for its peptides. They have got insulin approval recently in the US market, which is a biosimilar. They've got good products in Europe also. So I think Biocon would be something you could look at. Other than that, there is Arbindo, which has been affected by US FDA to some extent. But I think in terms of valuation, Arbindo is very attractive compared to the other companies. So Arbindo on basis of valuations would be a pick. Cipla because it has got good products. So I think you need to make a basket of some pharma companies. You could look at Apollo Hospitals to add to your portfolio, and then you have to hold it for the medium to longer term.
Right. Okay, so that's the view coming in as far as the pharma pack is concerned. But let me move on to the next question. This one again, I think this person has not written the name. Viewers, please start writing your name so that at least we can attribute the question to you. But this is for IDFC Bank. The buying price is 76 rupees. For the short term, Himain, what should be your levels to watch out for on IDFC first?
Okay. Short-term levels to watch out for. Support comes in at 69, resistance at 75. It's had a move from 50 to 50 to almost 79 over the last 3-4 months. So it's just slipped into a short-term correction. So these levels need to be kept in mind. For the upward move to resume, it need a close above 79. Like I said, support at 69 and 64, resistance 75, 70.
Okay, so those are the levels to track for IDFC First Bank. But on to the next query then. This is from Ravi, who's writing from Bangalore. Hey, means another query for you. This one has 175 shares of Praj Industries. Their buying price is 600 rupees. They want to know at this juncture, is it good to sell this stock or should they continue holding?
Well, Kanishka, frankly speaking, it's not done much. It's not bad, considering the fact that we've come off from a high of 875, we've gone to sub 450, and now we are consolidating. I believe a base formation is in place. A worrisome point would be if it closes below 448. That doesn't look like happening, but nothing very exciting either. If things need to improve from a technical point of view, we need a close above 540. So if there is a holding period of a year or so, I believe then it quantifies as a hold. Otherwise, it would be a switch or an exit.
All right, so that's the view coming in on Praj Industries. But let's move on to the next question. This is S. Manjunath, who's a senior citizen. He's writing in from Bangalore. He says he wants to invest 1 lakh for 3 years. Out of the following, which is the best investment for annual return of say minimum 15 plus percent? Geo Financial Services, Bajaj Finance. I have a small position in the above stocks as on date China. Bajaj Finance and Geo Financial Services, is Mr. Manjunath going to get his minimum 15 plus percent return for the next 3 years? Do you recommend these stocks?
Based on valuations compared to Bajaj Finance, but I think he's got into quality stocks. Geo Finance I especially like because of their tie-up with Blackstone, where actually they have already launched mutual funds, and they have already launched NFO. The new fund offerings are there, and I would believe that that would be a big segment of growth. I think both stocks are good. Geo Finance is the preferred pick.
Okay, so Geo Finance is the preferred pick among Geo Finance, Financial and Bajaj Finance. But the next query coming from Hyderabad again, Ekambaria has written to us. They are holding 400 shares of IRFC at a price of 155. They want to know if they should exit at the present juncture, given the rally that has been going on, or would you suggest a hold on this one? And apart from that, they want to invest in PFC as well. What would your view be, Hemant sir?
I think some of the railway stocks have had a phenomenal rise, Kanishka, over the last couple of years. So naturally, they're taking a breather, maybe for waiting for valuation to catch up or whatever. So this is going to take time to play out. So IRFC, hold for 2 years, that it makes sense. Otherwise, like I said, it's not bad, but it doesn't seem as if it's going to go anywhere in a hurry. If things need to improve, 150, 164 to levels to keep a watch on. If 108 breaks, one doesn't look like, but if it does, I think that would create some tension as far as the price is concerned. PFC, same story, super move from 80 to 580. We've already a year into a correction. It could take another 6 months or 1 year more. Outlook of 2 years, PFC is a clear buy. Anything less, no.
Right, so that's the view coming in on IRFC and PFC. Now remember, IRFC's stock is in focus today. In fact, that stock is up in a way at 2.4% today on the back of good set of numbers that they have posted for quarter 1. So that counter is also in focus. But let's move on to the next question. This is Manish Kala, who's writing in from Mumbai. I want to invest 2 lakhs with the 5-year horizon in defense sector. Now, please guide, is it the right time to invest in this sector, and which stocks are good to get profit, and also give a view on investing in Cochin Shipyard. Shahina, let me come to you for the defense pack. Now, of course, defense valuations seem very expensive. Is it a good time really firstly to get into the defense names, and if yes, then what are the counters where you see a bit of a valuation comfort, and what's your take on Cochin Shipyard as well?
Well, I think there is some bit of a consolidation, correction, whatever you may call it, in defense after like that huge run up that we saw. But at the same time, I would keep buying it at dips, because if you see any sector that have got the best order book position in hand, as well as there is no global issue in terms of what is going to happen to the overall growth even in the 1 to 2 year period. So I would say yes, you can keep adding at declines. I would say BL is my top pick. I personally also hold some of these stocks. There, I believe the order book position, especially for the electronic parts, is very good. Of course, there is some issue with regard to the raw material and the critical components, the magnets that are an issue. But I believe the government is working on it. Other stocks in this sector would be a BML. I think there also the order book position is good. A black swan in my view could be a signed DLM. We saw the numbers. The numbers were a mixed bag. They've got good defense orders. I personally have added at slightly lower levels. I'm bullish on the longer term prospects for signed DLM. That is also in defense. Cochin Shipyard, yes, they've got a huge order book position. Valuations were high. That is why we are seeing some bit of softness correction. But I would say it is a stock that you could keep adding at declines. So this is a story that you have to keep adding at declines and then hold for the long term.
All right, so all those stocks, Cochin Shipyard, BEML, Cyan DLM, all those are the counters to keep on your radar when it comes to the defense space. But moving on to the next query then, Hemant sir, coming to you, we have our viewer Haima writing to us. She wants to know your view on Canara Bank. Her entry price is 106 rupees. She wants to know whether she should continue to hold or exit the stock.
Okay, the Kanishka, the view is slightly repetitive, but hold if the outlook, the period holding period is for 1.5 years or more. If it closes below 106, you could see some sort of a downside coming in, probably to 95. But 1.5 years holding, I think one can expect 145 or more.
That's so that's the view coming in on Canara Bank on the charts. But the next question is coming from Siddharth, who's writing in from Nagpur. He says, will tariffs affect MNC pharma companies in India? Shaina, you've already spoken about the pharma sector and the companies, but let's talk about the companies that have perhaps a more CDMO heavy companies like the Laurus Labs or something like that one should be looking at, perhaps to insulate one from any tariff related impact coming in on Nifty Pharma. Shaina, what's your take?
See, in terms of CDMO companies, yes, I mean they're going to be equally affected like any other pharma companies for the US market in terms of tariffs, because they are supplying finally to companies that are launching those products in the US and other developed markets. In fact, I would say that they would be more affected in terms of the high tariffs compared to the other generic companies, because they would be squeezed by the original companies that are launching products there. But at the same time, yes, you could look at, so when I mentioned Biocon, I think there it has got the CDMO opportunity also. So I would prefer a Biocon over a Loris. Loris is, in my view, expensive versus other companies in the overall space. So I have a neutral on Loris. I would say if you want to buy Loris Labs, you should be looking at it at dips, not at current levels. And in terms of MNC companies, I do not think that in the Indian market they will be affected by any tariffs with the US. In fact, I would say if you have a long term view, you could look at Glaxo. These companies, the MNC companies in the domestic market grow at a very slow pace. So it's not like you're going to get a multi-bagger in the next 3 years. But yes, if you continue to hold them, you get a decent dividend as well as you get a decent growth over the long term. Glaxo is launching number of its products, parent products in the Indian market. So if you want to pick a MNC stock in this space, I would go with a Glaxo.
All right, so that's the view on the pharma CDMO space and the MNC space as well. But moving on to the next query then, now this viewer Neelam is writing from Jaipur. She wants to know the technical view on IIFL and RBL Bank. She wants to know what is the target that she should expect for the next 1 or 2 months. Hemant sir?
Okay, I assume this is for IIFL Finance. So I think the stock is overbought. We're slipping into a short-term correction. I'm not sure if this translates into an intermediate correction. For 2 month target, I feel would be 560. Beyond that looks, I wouldn't say impossible, but difficult. And the other stock you mentioned was?
The one was RBL Bank.
Okay, RBL Bank is formed a rounding top distribution pattern. Short-term correction is in the offing, and 270 has been a resistance level for quite some time, and 300 is something which hasn't been seen in multiple years. So once again, not looking exactly hunky-dory as far as technicals are concerned. Close below 250, we see 235. So a 2-year target maybe 275 or 280. Keep in mind the stock has moved from 147 in the past few months, so it's almost doubled. So don't be surprised if this walks into a deeper correction or it resumes an up move.
That's the view on RBL Bank. But on that note, we'll take a very short break on this edition of Buy Now Sell Now. Be right back with more queries being answered by our expert on the other side. Hi, welcome back to ET Now. You're watching Buy Now Sell Now with me, Kanishka Sarkar and Ankita Saxena, a show where we are taking all your stock-specific queries with our experts. So let's get back to all the queries then. So the next query is coming on Reliance. Now this is Ignatius writing from Kolkata. She has 70 stocks of Reliance at a price of 1,376 rupees. She's been holding them for the past 6 months and can hold for another 2 years. So what's the long-term view and what are the levels to add further? Shahina, let me come to you first.
Yeah, Reliance is one stock that actually you could continue to hold for the longer term. There are a couple of, over the next 3 years, I would say you could keep adding at decline. There are a couple of things that are likely to come up in the next 3 years that are very positive for Reliance. The first one being Geo. As we saw in the first quarter also, their ARPUs were around 208 rupees. I think going forward, there is a talk that, it could go up by almost 10% annually. So this could be one big positive. They're anyway adding subscribers. And so I would say it's a preferred bet in that space over its competitors. The O2C business actually, while they may not be doing that well currently, but if you look over the 3 years, 2 to 3 years, they have got their megawatt plants in the electricity business coming up. And they are talking of 20 gigawatts that will come up over the next 3 years in the renewable energy space. I think that is going to be a big positive for the company over the next 2 to 3 years. And that would be a turnaround in terms of that overall O2C space for the company. And of course, retail is actually starting to break even. So I think over the longer term, they are creating a big market share for themselves. So in all its divisions, I think RL is doing well. Individually, it's likely to grow. So and also Geo, there is a likelihood of the IPO coming over the next 2 to 3 years. So I would say you could keep adding Reliance at any dips. Valuations also are not too stretched. If you combine all the three divisions over a 3 year period in terms of valuation, so I would say you can buy, hold, and buy.
Right, so a hold coming in on Reliance, but let me come to you, Himain, for the next question. This is Mohammed writing in from Chennai. He has 500 shares of Jana Small Finance Bank. He's bought it at a price of 527 rupees. He's been holding it for the last 3 months now. Clearly, he is sitting at a loss at this juncture. Do you really recommend holding on to it, or should he really cut his losses at this point?
Oh, firstly, a small caveat, Ankita, because the data is of just 1.5 years. Probably not enough to take a slightly longer term point of view as far as Jana Small Finance Bank is concerned. Having said that, with whatever limited data that we have, things are not looking exactly copacetic. It's just broken down from a sideways consolidation phase. Now, this consolidation we can term as distribution on the weekly chart. Things are looking wobbly. Okay, we are still on Wednesday. A weekly closing on Friday. I mean, a weekly closing below 460 would mean further downside. So, frankly speaking, I don't think it's looking good from a medium-term point of view. Anything longer, I think she should take China's view because there's not enough data to take that view.
All right, so that's the view on Jana Small Finance Bank. But the next query is coming from Narayanan, who's writing from Bangalore. He has 200 shares of Tejas Networks at a price of 710 rupees. He wants to make a profit of 20% in the short term. He wants to know if it continues to be a good bet at the current level. Heymin sir, your view?
Okay, it's 20%. I believe comes in later. As of now, it's in a short, medium, and longer term downtrend on daily, weekly, monthly, any time, I'm not saying quarterly and yearly, but these three time frames, it's a sell on all the time frames, lower tops, lower bottoms. Nothing looks particularly interesting as of now. 570 is strong support, 650 is gone, 570 is the next support, and below that it's 505. So as of now, I don't think it quantifies as a buy. Maybe the picture changes after some time. We'll have to wait and see whether 505 holds. There's a very strong congestion area below 570 that might cushion the downside. So long story short, as of now, wait. There are absolutely no buy signals. Maybe investor can call in after a few weeks and confirm this. There's a turnaround in the offing, but till the downward momentum doesn't stop, it would not be wise to hazard a guess.
All right, so that's the view on Tejas Networks, but he may hold on. This one's also for you. This is Ron who's writing from Mumbai. He says that he wants your advice on the ideal exit price for Tata Motors, which could be held indefinitely. Now, Tata Motors, even on the fundamental side, the view is the outlook is not very rosy for Tata Motors. But of course, today, with the tariff news coming in for Japan, all the Indian auto companies are perked up. But one doesn't know how the tariff news will pan out. And otherwise, also Tata Motors has not given a very rosy guidance. So for Tata Motors, he wants to exit. So is there any exit level you think he should be holding on to it? What's your view on the technicals?
Agree with what you said. Frankly speaking, it's gone nowhere. And normally, quality stocks after such deep declines would tend to stage a decent, if not a good bounce back. Now has been that hasn't happened up till now. Levels to watch out: 667, 645. Possible sell level for our investor would be around 740. We made a double top at 740, so that's where we can expect resistance. So between 740 and 760 is a level where our viewer can, if the viewer is looking for an exit level, this is it.
All right, so that's the view on Tata Motors. Thank you so much, Hemant sir and Shaina, for joining us today. That's all the time we have for our queries today. On that note, we'll let you go. Thank you so much. Great interacting with you. All right, then let's shift focus to the primary markets as well. And this time we're talking about Shanti Gold International, which is going to launch its 360 crore IPO. The subscription will begin now. It'll open for subscription on July 25th. And to study the impact of gold volatility on the jewelry industry and how the company is going to utilize the funds that it raised via the IPO, we are now joined by Pankaj Kumar Jagawat, who's the CMD at Shanti Gold International. Hi Pankaj, thank you so much for joining us today. So let's start by talking about your company first. If you could give us a brief view on what exactly, if you could tell us a little bit about your company and the growth outlook going forward.
Shanti Gold is in a B2B business. We are into manufacturing of casting jewelry, which is studded with cubic zircon. So we make jewelry which is a replica of diamond, and we supply to all the B2B customers like Lalita Jewelry, Joy Lucas, Alucas Jewelers. So they are my clients. And we are mostly based on the southern side. Means we have all the offices more of its southern area like Chennai, Bangalore, Hyderabad, Coimbatore. So we've been supplying jewelry to all the corporate stores and all.
Also, tell us, why has the company come out with an IPO, and how will you use the cash proceeds? How will they be utilized in the company?
So we are coming with an IPO to raise funds. So this because it will is going to be used in working capital.
All right, so that's about it. But Pankaj, now, are there any key risks associated with the business, especially with the volatility in gold prices that we are seeing at this point?
So, what do we do? Whatever gold we sell it every day, that much we purchase it. So, we don't play on the gold price and all. So it automatically gets hedged with on our side. Gold has consistently, since 20 years, it has given 7 to 8% return every year. So gold has always been on the minimum 7 to 8 years, 7 to 8% return every year on year.
All right, thank you so much, Pankaj, for joining us and giving us some color on the upcoming IPO. But with that, it's a wrap on this edition of Buy Now Sell Now. Kanishka and I will take your leave, but we'll see you tomorrow at 11 to answer all your questions. You can keep sending in your questions and we'll take them up tomorrow. Thank you so much for tuning in. Stay tuned for more action on ET Now.